Good afternoon, everyone. This is Nate G. It's the DPL open house. It is the 1 o'clock session, and today we're going to be doing trade planning, trade scanning, and trade planning. It's really important to be able to find trades on your own. That's kind of what we want to teach you how to do here, and then find those trades and then set up your own trade plan. And that also goes for when one of us puts a trade plan in our own trade plan into chat or into a trade alert. It is my humble recommendation that you make that trade plan your own with your own stops and your own profit targets. And once you put that trade on, you realize that that is your trade. It is your job to manage that trade. And make sure you have your own risk parameters set. Joy, you don't think this is Nate G's voice? I'll check with him, but I'm pretty sure it's Nate G's voice since I'm Nate G. You might be thinking of Nate Bear. It's not Nate Bear's voice, but there are two Nates in this room that present. I am Nate G. Nate Bear has a beard, and you'll see his picture below the stream when he's presenting. Mine is there right now. So, and D-Man is the third person who you will hear on here. He has a much more irritating voice than mine. I'm just kidding. We like to give each other a bunch of grief. We've all known each other for a very long time. So, yesterday I was kidding Nate Bear about having a face for radio. He gets a good chuckle out of that. So, and you'll see when we do the Three Amigos session on Friday that we basically just feed each other a rash of crap at all times. And that's pretty much the way we operate. I tend to live my life through sarcasm. And so you'll see me trying to throw a sarcastic comment in here every once in a while. Sometimes they land, sometimes they don't. So you can ask anybody that's in here on a regular basis. Sometimes they're zingers, and sometimes I look like a dumbass. So yeah, Spy is just not wanting to roll over today, or even give. I mean, not even roll over, just any kind of a sustained pullback. It's just we've come up to new highs and we're consolidating up here, and we're basically finding that this is a fair value for the Spy. You know, this is we're consolidating here, and this is letting us know that people think this is a fair value area for where the Spy should be right now. So I'm waiting for something to happen, either a sustained move to the upside or to the downside. But right now, just waiting. So not much to do. And what I had said when I got off the mic earlier is finding a TPS trade plan in this environment is actually kind of difficult, because we've had 5 or 6 days of pull, and then we've had 2 days of bounce. And what we look for in a TPS trade is a consolidation period. And not many stocks are consolidating at the moment. They are bouncing or recovering from this pullback. So it is hard to find the perfect TPS trade that we would love to teach in here live. I could go back in time and show you some great setups. But I'm looking for a live trade that you might be able to place on your own, or we could place together in the room, right? So yeah, Sarcasm from me. Yeah, who would have thought it? Yeah, come for the trades, stay for the jokes. That's what we like to say in here, and or the drawings. You can come for the trades, stay for the jokes, and or the drawings, because we are all superb artists. Okay, so we use a scanning, which you know, but I'm just going to cover this again. We use a scanning tool called SAM. Okay, and SAM allows us to look at the S&P 500, the NASDAQ, and then you see that Nate Bear, myself, and D-Man have private watch lists, which we can update of just normal stocks that we're watching kind of on a regular basis. Many of those will be in your S&P 500 and your NASDAQ. And the way we can sort these is we can look, I love to play a 30-minute squeeze. So I can sort by a 30-minute squeeze. And I'm really only wanting to look at A+ setups, right? So A+ setup means that we have the trend, the pattern, the squeeze, and we have rounding momentum. So if you are new and you don't know what TPS stands for and what a TPS trade is, type a 5 in chat and we'll go over that. Okay. So a TPS trade is essentially what you've been doing in a profit surge trader most of the time. It's kind of a combination of earnings and TPS. But TPS is Nate Bear's primary trading method, and it stands for, T is for trend, and this is where the drawings come in because we're doing this with a mouse, right? Trend, P is for pattern. I feel like a child, right? And S is for squeeze, okay? Ooh, jeez, man. I tried to do an E, Z, Z, E. Wow. Now, this is why people stay. This says squeeze if you understand what's going on. And then to make it an A+ setup, we want a rounding momentum, right? And so you'll see the SPY right now is not in a TPS setup, but rounding momentum means we start to see a yellow bar, right? Which means the downward momentum has stopped and we're starting to see some upward movement. So that would be what it would look like. This is not a TPS setup, okay? So what are we looking for in a trend pattern squeeze, TPS, right? So when we have an A+ on this chart here, that means we have the pattern we're looking for, right? If it's green, it's a bullish A+. If it's a red, it is a bearish A+. But the A+ means that we have upward momentum in that particular setup. So if we're looking for names that have A+ setups, right? I was looking here on the S&P 500. LYB has one, BDX has one, EA has one. But if you saw during lunch, towards the end of lunch, I was sitting around looking for these trades and trying to find ones that would really give us a lot to work with, and there just weren't that many. But what I did find was a 15-minute squeeze on F, I believe, on Ford. That's going to be in the S&P 500. Here we go. So let's see if I can find it. At any rate, we can look at some more. So USB, you can see, has what I call a nested squeeze, which means that we have a 5, a 10, and a 15-minute squeeze. So we can look at that. We'll also look at AFL. AFL is interesting. I tend to like to look at trades in this 31 hour, 78 minute, but you can see there's just not a lot because of the movement we've had in the market. So another one we could look at is WTW, has 30 and 15-minute squeeze. I already looked at EA, I didn't like it. FLSR has a 130 and a 78. We can check that one out. But this gives you an idea of where you're going to find some A+ squeezes, right? We have some A+ on the daily we can look at. So I'm going to pull this off my screen so we can look at the charts, but you can sort by how many up A+ setups we have, how many downs A+ setups. You can sort by time frame, and you can sort in the different watch lists. This is a paid additional indicator that we use. I used to do this kind of scanning in Thinkorswim, but now that can be done in here. I know Nate and D-Man used to do some scanning in TC2000, but now that can be done here with a lot more accuracy, right? So SAM is what we use to find a lot of these setups. So I'm going to pull this off my screen, but I'm going to go through some of these charts so that we can talk about them, right? So if we're looking for a TPS pattern, okay, we are looking for a trend. So we're looking for a sustained move upwards, right? If we're looking for a long TPS. So this is a short term, this is a 10-minute chart. Okay, so this is a short-term uptrend, right? We're gonna have a lot of stocks that are like this today because we are pushing highs on the SPY, right? Now, not highs, highs on the day, or not new all-time highs. So we're looking for a trend. Okay, we have that here. So is our T? Yes, we have our T. Check. Right. Well, what about a pattern? What pattern do we look for? The pattern we're looking for, get rid of that. The pattern we're looking for is a spike high, a pullback, and a consolidation around the moving averages, right? So what does that shape look like to you? We call it something. So spike high, consolidation. This is actually a flat top, which I really like. Okay. We call it the woodpecker, right? So do we have a pattern here? Yes, we have a pattern. And again, I'm on the 10-minute chart if you want to follow along. Okay. So T, yep. Do we have a pattern? Yep. And do we have a squeeze? Yes, we do have a squeeze because we have all these red dots right here on the 10-minute. So a squeeze is a yes. Now let's look at the 15-minute. Ooh, and it starts to get a lot tighter. That squeeze starts to get a lot tighter, right? Okay, we can even look in here and go, all right, well, we've got some upward momentum. You can see, I've got to get really close, but you can see we've gone yellow to light blue on this squeeze. So that is upward momentum. If I go back to my SAM and I type in F, I don't know why it's not. Come on. I just want to look at F. Can I? Maybe not. Let's see if it's in one of our private watch lists. This is taking a little longer than I had wanted to. Let's see if I know it's in the S&P. So Hang on. Bear with me. All right, it is not showing an A+, but it's not showing an A+, probably because we've already moved into the blue here, okay? So we have a trend, a pattern, and a squeeze. I like the consolidation that's happening here right by VWAP. So this would be a viable TPS pattern trade, okay? Now, since we're playing this on a 15-minute, how far out do I need to go from an options standpoint? Yes, I would. Right? It's after market close tomorrow. Right? So I would play into earnings, but not through earnings. So I could play options for this week. Okay. So I would be looking at, let me see if I can detach my options chain again. So for Ford, here's my options chain for Ford. I would be looking at the 1250s or even the 12s, right? We have a lot of activity in the 13s, but I'd go a little bit into the money here, and you play the 1250s or the 13s for this week. They expire in 3 days, right? But we're going to be out of them before then, so let's pick the 1250s, and we can get those for about 67-68 cents a piece. Right? So let's say, for instance, we are going to pick up this trade right now. Let's say Nate Bear comes on and he says, I'm playing Ford into earnings. I'm going to be out before the end of the day tomorrow because we don't play through earnings, right? But we could get, if we get a continuation move upward, we could get a little bit more of a IV push because we're going to be playing that into earnings. So we need to set up our trade plan. Okay, so I'm going to use VP over here, right? We are going to play, what did I say? This is a potential trade plan. I'm not putting this trade plan on, okay? We're playing what did I say that was? The 426, right? The 426, 1250 calls for about 69 cents each, okay? That would be the trade, okay? Now we need to set up some risk reward parameters. Okay, so I'm going to come in here and draw a line at that volume profile, that point of control level. To me, that point of control level matches up here with some lows on this spike high and pullback. Okay. And then I'm going to put in my value area high. I'm going to make it yellow. I would need that to break above that level there. Okay, as you can see, it's kind of that flat top of this shape. And we're looking at this on a 15-minute chart, and we're kind of right at VWAP. But we only have, this small amount of candles here. So I'm looking for a break there at value area high. As you can see I've made this value area node completely drops off right there. Okay, so I'm looking for a break of that level. I'm going to put a target in here of the spike high on the day. I'm going to put that in green. Okay. And then I've got this lower level, this lower VP level, but I want to see some more information, right? I see a point of control level. Sorry, I see a point of control level right here. So I'm going to put that in red. Okay, and then I'm going to put this lower bar in yellow for the moment. And now I want to look at some more data. Okay, so I don't need to look at the 15-minute anymore. I'm going to look at a 5-minute and see if I can see more data that will help inform this trade. Okay, so this is the only information that I need because my pattern is already set right here. Okay, so let's say that Nate's come in, he's made a trade alert for Ford. He's going to play it into earnings. He's going to do a 426, 1250 calls, and he's already entered, right? What we need to do as our own traders is make sure we understand the trade. What trade is he taking? What trade is he taking and why, right? Does that fit with our risk parameters? And how many options can we take, to fit our trade and our risk parameters? Okay, so I've set my high here at 1305. That's going to be, we're going to call that target 1. Okay, and then I'm going to use this fib tool. I'm going to go from the high to the low, and then I'm going to draw a secondary green line at the 1272 extension. Okay, so this measures the full pullback, and then I have extension levels of the 1272 and 1618. If you want to see what that looks like, those are my settings. If you want to take a screenshot, those are my settings. Miley, I'm just saying I'm not taking this trade right now because I'm going to explain that here in a minute. Okay? But I'm setting up a trade plan, which is the goal for this this exercise. Okay? So now I've got my 2 targets in place. This is going to be target number 2. Okay? So now I have support and resistance levels. I'm going to move this up just a little bit to fit that point of control level. Right? I have support and resistance levels. I have target 1 and target 2. Right? And now I just need to make sure that my risk and reward are going to fit my own trade parameters. Okay, so if I was putting the trade on right here, kind of an intermediary value area low, right, and VWAP, which is a good over under level, so I could feasibly say this is a good spot to put a trade on. And this yellow line here, a break below, is my stop / add. I usually put that in there, right? Okay. If I'm putting a trade on here, I'm going to use a tool in here called long position if you're using TradingView. Okay? So I'm going to click on long position, and I'm going to say, okay, if I put a trade on right here at VWAP, it gives me a box. It just gives me a 1-to-1. I'm going to take the bottom end of my box and I'm going to move it to my stop level. Okay. So in this case, I'm risking 6 cents, right? In other trades, this is going to be much bigger, but I'm just kind of showing how this risk reward tool and setups work. Okay. So my risk reward on this trade, if I honor my stop and I take profits at my target number 1, is a 2.17, which means I have a 2-to-1 risk reward, right? Which is decent. I would prefer 3, 4, 5-to-1, right? So on the second part of my trade, let's say the last third, my risk reward is a 3-to-1. Okay, and on a trade like this, pushing up through that high, you could probably make it to that level. Okay, so the risk reward on this trade is good enough that I can put this trade on and feel comfortable about it. Now, I could also try and say, well, I think it's going to come down. It looks like it's coming down. I wonder if I could get it closer to my stop level and increase my risk reward, right? So let's say I picked it up down here off of a value area high that you can see here, right? That could be an opportunity if we get a little bit of a pullback. So then my risk reward turns into more like a 5-to-1 risk reward. And I like that even better. And so what you'll find is, now this is, it's kind of ridiculous. I was looking for a pattern that made some sense. And in this situation, you're only risking, 6 cents on the underlying, which is kind of hilarious, right? Because it's not a very expensive stock. You could basically just buy this. You don't need an option, right? You can just buy this, and you risk your 6 cents to make your 13 cents, right? But when you get into trades that are larger than that, and you're looking at something like, I was looking at a reverse trade. Let's see here. The risk reward tool is right here. It's the fourth one down. It's called long position. You can do the same thing for a short position. It just gives you a visual aid, of your risk to reward. But you have to set your target and you have to set your stop, right? And you can see right now that once it gets into that square, right, it starts to darken the area of the trade itself. So you can just look at this and go, okay, well, it's almost time for me to take profit, or, oh, we're getting close to my stop. I need to be able to stop. I need to be ready to stop. To answer many of your questions, I do not put in hard stops unless I have to leave the office. And I don't put them right at that level. I usually put them a little bit below. Profit targets as well, right? Profit targets, I do usually put it at that level if I have to leave. Okay. How do you determine? So let me see if I catch up on chat here. There is no long position risk reward tool in Thinkorswim. You have to do it with your own brain. But it's not really all that hard to do, right? If you go, okay, I'm getting in at $12.92, right? My stop is at $12.86. Then I already know I have a 6 cent risk, okay? So then if my target is 13.05, right? And I'm, putting on the trade down here at, 12.90, then, I have a 15 cent move to the upside as my reward. So I know that my risk reward is a little more than a 2-to-1. Does that make sense? So you don't need that tool. It's just a handy tool if you have TradingView. Okay. And then what you need to remember, right? I'm looking at this right now on a 5-minute, and generally I like to watch these trades on a 1-minute because I get a lot of information here. Is it holding VWAP? You know, has it come up into support? Is it bouncing off or into resistance? Is it bouncing off support? Does it look like it's going to hold? Right? Those kinds of things are important, but I have to remember that I took this trade on the 15-minute chart. Okay? So when I go to stop out, like this is a great example, I want to stop out on the 15-minute chart. Okay? So let's say I had already had this trade on, right? Let's say that the setup was back behind us, right? And this candle formed. Okay? And this yellow line was my stop. Would I have stopped out of this trade? For those of you who say yes, why would I have stopped out of this trade? And for those of you who say no, why would I have to stop out? Yeah. So I'm waiting for the candle on the 15-minute chart, because that's what I took the trade on, to close, right, below my stop line. So I wouldn't have stopped out there, right? I wouldn't have stopped out here, and I wouldn't have stopped out here. Now, the trade hadn't set up yet, so that this is sort of a, you know, a backwards way of showing how I manage a stop out. Okay? Because right here there's no trade setup. I would never have been in this trade. But if that same candle happened here, right? If that same candle was the next candle on here, right? I would not stop out. However, if I'm sitting here watching this on a 1-minute, right? This looks pretty scary. And you're probably going to end up stopping out. So what you have to remember is, if I'm watching my trade on a lower time frame, I need to stay calm, right? Because it could just be a wick. It could just be a wick out, a run of stops, what have you, right? And not be enough to stop you out of that trade. Right? So understanding your risk reward, the key to this lesson for me, right, is the key to the lesson is, if one of us says we're putting on a trade and you just go and buy the same option, right? If all those details are there, the same option, the same strike price, the same amount, and you don't look at the chart first and make sure it sets up with your risk parameters. So for instance, what did I say these were trading for, right? You know, 68 cents, right? Let's say our I should have chosen a better a better option for this. Just let's find an option that makes the math a little easier. Let's do this. Okay, so let's say we're gonna buy the $12 calls here. Should we do that, or should we do? Yeah. Okay, so we're gonna buy the $12 for a dollar, right? So if I have a $1,000 max position, right, and each contract is a dollar, right? My max position is $1,000, and each contract is worth $1. How many contracts can I buy? And I should probably do this on a larger option, right? Right. I can buy 10. Okay. So for the purpose of this argument, let's do. God, this is going to be a little bit more difficult because we're not even risking $1 here. So let me find something else. But to illustrate the example of risk reward with options, right? We all understand if we're playing the underlying stock, we are risking in this particular trade 6 cents per share to make, I think it was 13 cents, right? And then even more to the, I think it was 23 cents to the top side per stock, right? So if we are looking at something larger, let's switch over to something. Oh, PayX was another one that I kind of was interested in here. So PayX has a similar pattern, right? It has a upwards pattern, right? It has almost a bird pattern, right? The shape is a little bit different. We're consolidating around some moving averages in VWAP, right? We don't have a big spike high, so it's harder for us to figure out what our target would be. But let's say this will be a little bit easier to talk about, because let's say our target for whatever reason is going to be 122.50, okay, and our stop, let's put at 121.34 down here, right? Kind of a value area low, and if we're buying from there, we're looking at this market just continuing to rip as I'm talking. Let's see. It sure is. Man, just I wouldn't even call this a trend up day. I would just call this just that strength is just being maintained. Kind of playing in this channel, sort of. Right. So PayX has a similar channel, right? And if we're in this case, we'd be risking 35 cents. I was hoping we'd risk more. Let's say we're going to get into this late, and we're risking 50 cents. Okay. And just for the sake of argument, we're going to go 123 as our target. Okay, so we're risking 50 cents on the underlying. Let me look at what PayX options look like. Oh, that's pretty good. Okay, so we're going to get into, this is not a trade recommendation. This is a teaching example. we're going to get into the $125 strike calls for May 17. Okay, those are currently 95.105 is our bid ask, so those are currently selling for $1. Okay. Oh, I don't like that. God dang, I'm trying to find a good example. And I'm just not finding the option contract that's going to give us a good example here. All right, let's do this. Sorry. Let's say we're going to play PayX. We're still going to buy the 125s, but we're going to go out. We want to give ourselves time. So we're going to buy the September 20s. This is sort of a random example because we're on a 15-minute chart, right? But those are basically selling for $5. Okay. So, and they are basically a 50 delta, right? So in this particular case, if we're going to risk $1,000 per trade, right? How many contracts can we buy, right? If that's our max trade, not our risk, how many total contracts can we buy? This is, remember earlier I said, we try to dumbify this for you, right? Right? You can buy 2. Now, the question is, if our risk is 50 cents, right? So that option is going to move, that option, can I get that back? Nope, I can't. That option for every dollar move, right? That option is going to move 50 cents. So on a $5 option, let's say our risk, our total risk is $250 on $1,000, right? Our total risk that we are allowing ourselves to take is $250 on 2 option contracts. Can we take this trade on this, 2.3 to 1 risk reward? Does that fit our risk parameters? So if we stopped out at this level, how much are we risking on 2 contracts? I'm just picking a delta 50 at the moment, right? Yeah, this is well within our risk parameters. Right, it absolutely fits our risk parameters. We're not going to exceed our $250 max loss. So when we go into figuring out, somebody else said take a look at things like V. V was another one. I like V's chart. Right, but the things you have to factor in, everybody's account is different. Your max trade could be $1,000 with a max loss of $250, right? But if you take a trade that let's say your stop is at this red line, right? And you take an option that will move you outside of your risk parameter before your stop, then you're going to exceed your max risk. And the big thing that we teach in here is discipline, right? not taking a trade that's going to exceed your risk parameters, and your risk parameters need to be defined by where the stop level is on your chart, right? And you can kind of calculate that with options using delta and how many options you're taking and what your total risk underlying is. Okay. So when a trade comes on, it's important that you take that trade and make sure that it fits inside your risk parameters. So someone like D-Man might have, you know, $10,000 max trade, right? Parameters. And so he might put on, you know, 25 contracts, right? Whereas somebody new would have a much smaller risk parameter and would only put on, you know, 2 contracts. Does that make sense? Yeah, and you can figure that out by using delta. Delta is the percentage move for a $1 move in the underlying stock. Roger, I go long on calls and long on puts, which means I'm trying to get them capture a downward move in the market. I sometimes do spreads, but not all that often. So the important parts of this lesson were find the chart, learn how to mark it up. The fine points are have a stop or an add point if it bounces, have a target, have a secondary target, and then understand what your risk to reward ratio is, and is it 2 to 1 or better? If so, good to go. That's my motto. If so, good to go. But one of the problems is when we're trading by ourselves, right? We think, okay, I'm going to take this trade, and then the trade comes down here. Like, well, what do I do with it? I'm not sure. And then it comes to here, and you say, well, maybe I should add because I'm really underwater. And then it comes to here, and you're like, well, I just don't know what to do with it. And understanding that the chart is broken and you need to honor your stop is incredibly important. And one of the discipline and having a plan are the most important things that skills that any trader can have. You just need to be cold, and you need to cut a trade that's not working, right? And move on to the next. There's always another one, right? But making sure that, you know, trades that are losers, you don't know which ones are going to be winners and losers. You can take trades based on criteria that give you an advantage, like the TPS method, for instance, that give you an advantage that trade will work out in the direction you're playing it, but you don't know. Nobody does, right? You take shots and you manage the risk of those shots. So if it works, I'm making 2 or 3 to my losses. And if you do that and you're disciplined about it, you can have a 50% win rate and you're still making money, right? Because your wins double or triple your losses. But that takes discipline, right? And that's one of the things we teach in here, and we go over and over and over and over again. I think for those of you that are in here, how many times have I done this similar lesson? Mark up the charts, figure out your risk reward, Figure out if it sits within your parameters. Look at the option contracts. Calculate what your risk is going to be. No, the zero DTE trades are very different. Yeah, this is swing trading technique. However, you do need to be able to manage your risk reward on a zero DTE anyway, so that is important. Targets for these TPS trades, I generally do target number 1 as a retest of the spike high within the pattern, and then I do a secondary target based on a fib extension measuring the high to the low of the pullback, and I measure it to the 1.272 extension. I just use the standard VWAP in there you go, in the in TradingView, and then I just turn off the upper and lower bands and the fills. The fib tool, what do you want? You want fib extensions? This, like I just did right here. Okay, you can see it shows, you know, Fibonacci retracement levels, but then it also shows the extensions. And my settings are right there, if you want to take a screenshot of that. Yeah, I'm using Epic Pen to draw on my charts. Yeah, so we do this time and time again. And, you know, I was saying earlier, this is hard. It was hard today to find a good stock. And, you know, a $13 stock is not the best for this type of lesson. But this pattern and setting up these levels is the same, whether you're trading a $1,000 stock or you're trading a $13 stock. And if you want to see more of these, there are, I don't know, 6 or 7 trade plans on my on YouTube that I've done before in the room. That you know, we've picked something, we've made a trade plan on it, we've decided which options we're gonna play based on the time frame chart and whether earnings were coming or not, and we've set up our risk reward, and in many cases those trades have worked out great. I don't have I should go back in those videos and write in whether they were winners or losers. And then do like a post, a recap of, you know, did we follow our plan? Did the trade do what we wanted it to, et cetera, et cetera. Yeah, generally I use target 1 and target 2. I'll take about half to 2/3 off at target 1, and then I'll leave the trailer on for target 2. Generally, prior to the way the market's working right now, I would hold all of it to target 2. But there's just so much, I guess, volatility, overnight volatility as of late, that I like to take a good chunk off at target number 1 and put it in my pocket, so to speak. All right, D-Man is up now. Yeah, that's a nice chart. That looks pretty bearish to me. D-Man, are you ready to take this over? If you guys have any questions on that, you know, I can answer them in chat on what I went over. But the important takeaway is planning your trades out, right? And making sure you have stop levels and targets. So I'm going to hand this over to D-Man, and Nate will be on after him, and I will be in chat. So talk to you all soon.
Good afternoon. How's everybody doing today?